Did you know that one single index reflects over 80% of the entire US stock market? That's the S&P 500, the heartbeat of the American economy. When it rises, investors all around the world follow. When it crashes, the ripple effect hits traders and markets everywhere. Let's break down what this index really is and why every trader should be watching it. Welcome to MarketAreas, your reliable trading assistant. The S&P 500 isn't just a list of companies. It's the 500 biggest players in the US economy. Tech giants like Apple, Microsoft, Google, Tesla, Amazon, plus banks, pharma, energy. Together, they make up more than 80% of the US stock market. That's why traders say, want to know investor sentiment? Look at the S&P 500. The S&P 500 reflects global market sentiment. In 2008, it collapsed, and we all know what came next. In 2020, during the pandemic, it crashed but bounced back even faster. For traders, it's a risk indicator. When the S&P drops, risk assets fall while gold and the dollar rise. For investors, it's the backbone of ETFs, funds, and even your future retirement savings. Ignoring the S&P is like driving without a rearview mirror. Here's what the S&P 500 looks like today. Overall, the trend is still bullish, though we're in a correction phase. The price is approaching the trend line, so shorting here is kind of risky. Personally, I prefer buying dips and riding the long-term trend. I only short when my indicator confirms the setup. Today's range: high 6488.2, low level 6370.1. For 2 days in a row, the market has tested the lower range but failed to hold below. That gives us strong chance to retest the trend line. After that, we'll see if the correction continues or if we get a fresh breakout. For day trading, I'm watching a tight range, 63.47, 64.14. We're in a flat zone now, so the plan is pretty much simple. Above 64.14, long setups. Below 63.47, short opportunities open up. Now let's take a look at MarketAreas strategic connection. The trend line aligns with the global balance level at 6353.5. I've said it before, balance levels often reject price, so this area is critical for sellers. If we break and close below, the path opens toward the untested volume zone at 6327.8, 6322.5. The main downside target will be 6310.7. If the price breaks higher, first stop is 6450.4, the start of seller zone. From there, we'll likely see a retest of the 6488.2 high, where the upper seller zone sits. As I explained in the previous videos, the red zone isn't attractive for the market maker. Price usually won't stay there long. At the start of the seller zone, I activate my sell grid strategy. The indicator places 8 pending short orders with take profits at global balance levels. We're about to test the trend line. Only after a breakout and retest or bounce, we will see the true direction. Locally, both buyers and sellers have setups. But remember, the market always has surprises. The market doesn't pay for predictions, it pays for discipline. That's why it's not just about analyzing the chart, it's about managing your risks. Because the S&P, like any other instrument, can skyrocket or crash in an instant, and only discipline decides who stays in the game. If you found this video helpful, hit that like button and subscribe to the channel. It really helps us to grow and makes sure you don't miss the next videos. Let's trade together, where the world's biggest trends are born. See you!